The Gwart Show is sponsored by Ellipsis Labs. Ellipsis Labs is building a world where mainstream finance happens on-chain. Their first product, Phoenix, is a fully on-chain limit order book DEX on Solana doing hundreds of millions of dollars in volume. I know this team personally. It's one of the strongest in the space. If you're interested in working with a team that's here to stay, Ellipsis Labs is hiring engineers passionate about DeFi to join their team. You can find Ellipsis Labs on Twitter at ellipsis_labs or head to ellipsislabs.xyz to learn more and apply. Hey guys, we're here today with Benedict Brady and Doug Colkitt, two of the homies, both very well educated on markets, DeFi, all things crypto. If you two want to introduce yourself, Benedict, go ahead.
Sure, I'm Benedict. I work at Ergonia. Ergonia is a DeFi-focused trading firm, spun out of Cumberland DRW about 2 years ago. It's basically like you can think there's a world of like firms that do quant trading in HFT and crypto, like Jump, Wintermute, etc. Ergonia is kind of like a small version of this that is primarily focused on the DeFi ecosystem. So like that is like kind of where we find our competitive advantage.
Cool. I'm Doug. I'm the founder of Ambient Finance, which is a next generation AMM. What we're really focused on is kind of fixing some of the core fundamental economic problems around passive liquidity with an emphasis on kind of making sure that liquidity can stay decentralized. Prior to that, I was a MEV searcher for a tiny bit. And then prior to that, I was a HFT quant. Started my career at Citadel and traded in a number of markets, tradfi markets around the world.
Nice. Yeah, so today, like, the context is both of these guys are just probably two of the smartest people that I know on Twitter, specifically with regards to markets, trading, microstructure, and also seemingly willing to share opinions that I think you guys would find interesting. Doug, we'll start with, so prior to this, you worked in HFT. What made the jump to AMMs? Is this like, I don't know that anybody else I know of has like gone from HFT to AMMs.
Yeah, or at least not pro AMMs. They all kind of hate AMMs. I guess I'm kind of the only, I think, HFT person who actually likes AMMs, which is, I don't know, maybe it says something about me. But no, I kind of randomly during the pandemic, kind of randomly just started playing around with stuff during DeFi summer. And originally just kind of built out some MEV strategies on the side. So at the time I was an independent HFT trader, so kind of had some leeway to kind of experiment with different stuff in my own capital. Thought it was interesting to kind of like learn at least how like Ethereum worked at like a low level technical thing. And then actually like back then it was kind of so easy to be successful that like it quickly seemed like, hey, this is like the best opportunity right now. So became a MEV searcher in Ethereum world, so all AMMs. That was just kind of really interesting. But like I would say, like actually didn't really respect AMMs that much. And then UniV3 came along and thought concentrated liquidity was really cool. And just in general, like how can we improve like the core XYK stuff with kind of keeping like the core idea of like liquidity as decentralized, and then kind of got more energized around there. And then I think, right, like the biggest problem is like now what everyone calls LVR, but like what I've always thought of as like this toxic flow problem. But I think, right, there's a lot of room for scope of actually, and people are kind of recognizing this now, but like that was something kind of recognized early on, that there's a lot of scope to kind of fix the problems in AMMs and make them more competitive with markets if we could actually tackle this problem, or at least be less dumb about it. So started building, originally we were ProxSwap, now we're Ambient, started building it then, and then like kind of needed to build out this whole new protocol to actually do it. But it's interesting now, like UniV4 is actually kind of doing a lot of the similar things that we started doing or will when they're out. So that's kind of how it landed here.
So Doug, like as an HFT searcher, an HFT trader initially, like how did you feel kind of turning your back on CLOBs? Did any of your friends from the HFT world look at you and are like, hey man, we had such a good time?
Yeah. You know, it's interesting.
They were so efficient for price discovery.
Yeah. So it's interesting, kind of biased on, you know, I'm probably talking my own book because I was like much more pro clubs when I was making money from clubs, and now I'm not making money from clubs, so I'm kind of more anti clubs. They're obviously good, right? Like they're good compared to I don't know, like other what came before them. I guess the argument I will make against clubs is there's a tremendous amount of like rent seeking activity, like pure PvP stuff that I think is hard to hard to justify like why that's socially good. Like for example, like biggest thing at least on clubs I traded, they were relatively like wide kick, but which means that like whoever was first in the queue was right. Like that's just like free money if you're first in the queue, or like as long as you're fast, right? Like you don't have to be intelligent. So like actually when I started my career, like would build out more like signals and stuff, like alphas. Um, and that's like kind of interesting because you're kind of making the market more efficient. But then it's like the longer I spent it, and especially like the longer, like the more I was kind of building the whole system from scratch was like, well, like the ROI is all kind of just like getting to the front of the queue or like similar type of stuff. So I did kind of become more jaded towards the end. But yeah, I mean, I don't, Benedict, what's your take here?
I mean, like, yeah, there's a lot of energy expenditure going into being top of queue and also into like specific latency races that you can see as like semi wasteful. I just think the club primitive is quite elegant, and like I guess the argument in favor of it is that it is like actually a very elegant design for price discovery. And the argument against it, I guess, is like blockchain systems were constrained for a very long time that they couldn't. Like I think the debate has been rehashed over and over again, but I do think that like people slightly underrate that the club is like actually quite elegant.
Yeah, I mean it is quite elegant. I guess like one issue is that right, like I mean like intents are kind of like cliche, but right, like limit orders are like intense, and like the intent is like this is the price I want to execute at, which is great if you're Warren Buffett and like okay, this is like my price target, $60 a share, I'll buy then. But like it seems like a lot of participants in a club, that's not actually their intent, right? Like their intent is I'm a market maker, and based on like these alphas, I want to buy slightly whatever 2 bips or whatever cheaper than current price. And so like there's kind of it always feels like there's kind of this mismatch where like I have to constantly change my intents. And then like the same thing like AMMs, right? Like they're also like intense. Like I'm an LP, I will buy if I get a 15 bips above, that's the swap fee, and sell like below. But like it does seem like maybe, right, like if you could actually make those like quote unquote intense more expressive, you could make the entire system more efficient instead of like this constant grind. But like, I mean, that's kind of hand wavy, I guess.
Yeah, yeah, I get it. I not to hijack the conversation at all,
No,
but I do
actually,
think
please do.
I think that one thing that would be interesting to talk about is, I mean, a key component of DEX design is kind of like what the underlying protocol allows you to do. So how the L1 is designed, right? How the L2 is designed. I think the three of us have had a lot of conversations in the past about kind of the roadmap of Ethereum L1, and I think Doug, like as a core application designer for that, you have a lot of quite interesting insights into
Wait,
what's painful, what's not, what allows you to get complaints.
no,
We'll go with
I
that.
both. I mean,
So I
complaints.
guess this
Good.
is complaints and admiration. So I kind of have two questions here. So I'll go one at a time. The first one is if you got into crypto in 2018, right? You're told about Ethereum 2017. It's this execution layer, right? It's incredibly good at execution. They're trying to build kind of like this place to build applications, right? Like you're kind of walk through the course of 2018, 2019, it's for execution, blah, blah, and then kind of, even though it's the dominant execution layer, at some point, the Ethereum kind of community decides that
Yeah.
instead of selling execution, the optimal thing to do is to sell like
Settlement.
settlement and maybe something called data availability. So they kind of abdicate their market dominance, and they decide kind of like to start selling a different product. right? So this has kind of like been well documented. I guess my question for you is, if you had kind of like 10 core dev resources to spend, how would you allocate them between improvements to Ethereum that are improving settlement, that are improving DA, and that are improving execution?
Yeah, that's an interesting one. I mean, look, like I think kind of eschewing the entire like execution layer on the base layer is like a big mistake. Like I do see right like why you need L2s, but like from an application like developer like perspective, like it sucks right now because like we started like a couple of years ago, like the default answer is like, well, like where should we deploy? Like default answer is like Ethereum, right? Like you could deploy somewhere else, right? But that's like an ecosystem strategy. To think about ecosystem stuff, you just want to do something. Let's try it on Ethereum. And we did actually do that when we started like a year ago, and then we started focusing more on like L2s. Now, like if you're an Ethereum developer, like you spend all your time just thinking about like ecosystem L2 stuff, and like no matter like even like Arbitrum, like the biggest L2, like that's not a sure bet. Like who knows? Like Arbitrum is going to be relevant in 3 years. Like so it sucks. Like it takes away like time and effort, and it's like you're just playing politics. You're on like calls with like L2 teams all the time. So that sucks. So it's not like Solana's almost like the default answer, which is kind of interesting because like it was not like it was like an ecosystem play 2 years ago. So yeah, I think like like sacrificing base layer execution is not a good idea. It's also like value accrual. Like people like whatever BlackRock, you know, what central banks like are going to want to like execute on the base layer. They're not going to want to. And it's like these L2s are not like super secure, right? Like they're multi sigs at the end of the day. Like so, people still want to execute, I think, on the base layer and like be more secure. So I think like base layer scaling is really neglected, and there's like no reason not to do base layer scaling. Consensus I think is important. Like one thing I'd say like the Ethereum like vision that I do align with strongly is like separating out like these execution constraints from like consensus itself. And I think like Ethereum did kind of like see that like, okay, like we're not going to be able to get everything we want, but like we have very strong secure decentralized consensus. Like how can we scale that past? And eventually like you run into execution constraints. But I don't think like we've really hit that limit at all. And like right now, like the gas limit is ridiculously low. Block times are ridiculously long. Like not even relative to like tech advances, like Merkle trees and stuff, just relative to like what Geth can do now on like not a beefy machine. So like, yeah, that would be my criticism.
Yeah, that makes sense.
All right. But Benedict,
ahead,
before you move on to the next question, answer your own question. I want to hear you answer your own question.
Okay, sure. So I think that there's this whole thing. Ethereum is for users or Ethereum is not for users, right? And the worst thing that you can do is continue to push EIPs, some that are for users and some that are for not for users. And you see things like, I don't know, people trying to make deploying contracts easier, people spending a bunch of time thinking about the gas limit, etc. I think you kind of have to go really hard in one direction or the other. And I think um, I was initially more sympathetic to the, oh, let's keep execution on the base layer, blah, blah, blah. But as I've like realized that the Ethereum roadmap moves very slowly, I've thought they should go almost even harder in the other direction than they are. I think that there's almost like too much thinking about things like enshrined PBS and raising the gas limit and improving like minutia with the EVM. They should like basically just go full
Just
fuck it
settlement.
and like extend the block
Oh,
times
extend the
to
block time.
60
Oh,
seconds.
like make it unusable. Yeah, I guess there's almost an argument for that where it's like L1 is around, but like just kill it. Either kill it or
I think in 2021 there was a strong argument to stick to execution, right? Execution was your edge. You
Yeah,
should have
but
just stuck with it and milked it for as much as you could.
like this is like the rock and the hard place everybody talks about, though, right? Like it's gonna lose to Bitcoin if you do that. Like if you push block times like even farther out and just like optimize for Raspberry Pis, like it's just gonna like even more quickly lose to Bitcoin. I think in that scenario,
Yeah,
unless Unless you think
Some
the
businesses
expressivity
are
on
meant
the
to die,
L1 is
Gwart.
sufficient. Well, I don't disagree with you, of course, but we'll let Doug chime in.
Like, the greatest thing about capitalism is that some businesses don't really find a niche and then they die. And like,
I mean,
yeah,
I
we're
guess
done.
I
Doug.
agree, but like Ethereum's not. I mean, everybody talks about Ethereum like it's dead, but it's not really dead. Like, there's still a ton of activity on Ethereum. Like, it's like it feels like it feels closer to like Microsoft in like the early 2000s, where it's like, okay, this thing's gonna be around a long time, and it's like maybe kind of being run shitty now, but like I don't think the right move in Microsoft in like 2001 would be like, okay, let's just like kill the entire company. It's gonna die.
Let's just milk it for all the cash it
Yeah,
made.
I don't know. Like,
Yeah,
I guess to your
yeah.
point, Gwart, is that like it's like something I kind of say trolling-ish, but like I do think the money plus tech being in the same place is like greater than the sum of the two. So like Bitcoin is like much better at money, and arguably like Solana is better at tech. But I think like if you actually have like censorship free money on the tech layer, like that just unlocks so many more things than like if you have to like bootstrap the money like on top of the tech, or vice versa.
Do you want to tell us a little bit about Verkle trees and why they've become underrated?
Oh, Virgil tree.
People that will not be named are trying to trash Verkle trees
Oh,
a lot,
really?
but we have
Oh,
the
I
number
actually
one
haven't been
stand
following
here.
up. Yeah, I mean, Virgil trees I think are really important in terms of like this idea of separating out like execution constraint. Because like the biggest problem now, like why you can't raise the gas limit, is that state state growth. So like the idea is, okay, I'm running my Raspberry Pi. I've got my entire hard disk on a USB stick or whatever. I'm going to run out of my USB stick, and like uh, so yeah, like that sucks. Like validators have to store all the state, because they actually have to verify the transactions are there. Virgil trees are really cool because it's a different way to store the state, which means proving the state is actually can be done in a transaction. So rather than validators or nodes having to remember the state, and whoever wants to do the transaction can just pass along the data, which means, right, like no nodes in the network actually have to remember any data. And like some people are like, well, okay, the data still has to be stored somewhere. Well, like, yes, but like it doesn't have to be stored across like thousands of nodes. And two, right? Like you don't have to store all the data. If I only want to do Uniswap transactions, or I guess if I only want to do ambient transactions, which I don't want to do any Uniswap transactions, I don't want to do ambient transactions. I don't have to store ambient specific part of the Verkle tree. Which is a huge unlock, and right, like it breaks down one of these things that are like the bottleneck of like execution over consensus, and breaks down like the next most relevant thing. So like absolutely, like essential, and like I've said this a bunch, like Verkle trees, like the goal should be like get them shipped like as soon as possible. Like I don't think there's a reason besides just like kind of this navel gazing stuff going on.
So what's the end vision here, right? You have really large asset manager kind of moving money around, and then are there L2s? You're one of the people who have heard most about co-processors.
Yeah.
And
Well,
then
I mean, I think the end state actually is just like zkEVMs, and like at that point, like technically, maybe you don't need L2s, right? Because like, what does it like a zk rollup do now? It's just like here's the state, here's the zk proof that the state transition is valid, and like now we're talking about like zk stuff has advanced to the point where you can actually like used to be, right, these proofs took hours. Now like potentially in the near future they might take seconds. So if validators just have to show like, okay, this block is valid, here's the zk proof, verify this snark, well, now like validators aren't like bound by the execution layer at all. So like in that world, why actually do you need L2s? Now, I'm not saying that's possible today, but like 5 years, 2030, that's possible. So like I think there is a world where like L2s don't exist anymore.
Okay, so as an application developer, like this is in the current world, right?
Yeah.
Not in the world where we have solved the zk
Yeah.
L1 thing. Although I do think it's a compelling vision. You're trying to decide whether you should deploy on an optimistic rollup or a zk rollup. Is there anything that moves the needle? Like, do you care at all? Like, I can
Do
talk
you
about it
do
from
you
a
care
user
at all?
perspective as
Does
somebody
anyone
who
here
trades
care
on
at
them.
all? Optimistic rollup versus CK?
Like the one argument I could see is like maybe you get faster bridging.
Yeah, the bridging, lower frictions on the bridging helps. But like not, I mean, like not huge. I don't know. I don't know. Has anyone here considered whether it's ZK rollup or optimistic rollup, whether you transact ever? Sophisticated.
Gwart, do you care? Do you use them?
When you say bridging, you mean like the enshrined
Yeah,
bridge?
the enshrined bridge. But
Yeah,
then
the
even
enshrined
then,
bridge.
right?
Yeah. So like, does anybody use these?
Yeah, the
Even
enshrined bridge.
that's the thing. Yeah, nobody actually uses those. To my
I
knowledge.
guess like technically, like some or the liquidity providers on the real bridges use those, and like maybe that constrains their cost of capital. But like if you go on D bridge, like I don't know, can you really tell? I can't really
Yeah.
tell.
So why are there like 20 bridges and like not that many other things? Does anyone have a take on this? Gwart?
Doug, take over here.
There are 20 bridges. So you
Well, I can
get,
give you like the
yeah,
cynical
yeah,
answer.
I was
But
going to
Doug,
say
Yeah,
the
give us the
cynical.
cynical
I
answer
was
first,
actually
and
going
then
to say
Doug
the
will.
cynical answer.
oh, go ahead then. No. Your cynical answer will be better than mine. I mean, it's probably pretty straightforward.
Yeah, there are 20 bridges because there are 20 different bridge point programs. No, I don't. I mean, like, I think at the end of the day, like, maybe there's an argument to be made that like there will be one winner and it will have like strong network effects. But like right now they're relatively commoditized, so it's worth like taking an at bat here because you could be the winner. Like, would be my argument if I was gonna make.
It seems like the ultimate picks and shovels play, like in the ETH roadmap. Like everyone is gonna want to yeet between chains. It's like so obvious. Like you're gonna have, and I mean, you like stick a little token incentive program on there. that was my cynical answer that I was gonna say. Benedict, okay, I want to go back just for a second, like just because you've been grilling Doug now, you're not immune to getting grilled yourself.
Bummer.
Do you? Well, I mean, you guys can push each other back into the hot seat whenever you want, but I do want to ask you, like, just in terms of like the trading that you do, how much? And I know you can't like go into like too much alpha here. I like give away enough alpha as is on here, but I want to ask, like, how much do you like? First of all, maybe interact with AMMs. Like, is a lot of trading that you guys do with AMMs or no?
Well, AMMs are kind of where the majority of the volume are on DeFi. So, I mean, despite the fact that this podcast is sponsored by, like, I guess one of the dominant CLOBs in the space,
Best one,
the best one. Most of the trading is on AMMs. So, I mean, the answer is like clearly yes. You kind of have to interact with Uniswap to play these games. And I think the like most interesting thing about the L1 L2 distinction is just kind of like how the transaction supply chain works. And this is kind of where some of my fascination with the transaction supply chain came from is, okay, you're trying to enter like a trade. Okay, the market moves. Oh, you want to trade on Uniswap on Ethereum. Okay, what do you have to do? You have to send it to 10 builders, or I guess now 3 builders. Then the builders like compete in some meta auction with the relays and the validators, and then kind of like maybe you end up on chain this way. Whereas like if you want to trade on an AMM on Arbitrum is like basically just fully FIFO, and then Optimism is like 1 second blind auctions by the sequencer by priority fee. And you end up with kind of like a bunch of different transaction propagation engines and like transaction supply chains, and then all of the trades look like basically exactly the same. So kind of like actually the devil of the details is like kind of how these things process transactions. And I think this is like it's both fun from a nerd sniping perspective and also like obviously a huge pain in the ass. Like you don't actually want finance to have, you don't kind of want table stakes to be trading on all the price discovery venues to have to like understand all of these, I think quite nuanced and like relatively poorly documented, like kind of, I guess I call them supply chains, but some of them are literally just like you're sending it to a server on like an L2, right?
Yeah. So okay, now like we've
actually though, let me
Doug's
back up though. From before that, Benedict, I actually have something to grill you on. So like you said, like most of the volume is AMMs. even on Solana, where like you've had CLOBs for a while. So like if like CLOBs are so great compared to AMMs, why are AMMs still dominant on Solana?
Yeah, that's a good question. So, one reason is Solana has well-documented stability issues. And if you're going to market make on a CLOB, you have to land a lot higher volume of transactions than if you're market making on an AMM, which is, I think, like the initial reason that AMMs took off on things like Ethereum. So when the blockchain is unstable, sending all these transactions to update your orders on CLOBs is kind of like non-trivial, shall we say. And this kind of like gives CLOBs like an obvious disadvantage. I think also opens up a market opportunity for like people say, oh, there's too much infrastructure in crypto, blah, blah, blah. But like one piece of infrastructure that would be really nice is being able to land 10,000 transactions per second highly reliably. Like that doesn't actually really exist anywhere.
Yeah.
Go
All
ahead.
right. Side note. Well, I was just gonna say, like, I mean, like the overwhelming majority of volume on Solana is like shitcoining. Like the clubs on Solana
But
aren't like
even Solana
you're not.
USDC, I think is I actually don't know, but Sol USDC, I think the majority is still Orca
Yeah, Sol
Radium.
USDC I think is like the most evenly
Is it?
distributed among different types of markets. Like kind of all the major venues have a decent amount of market share on Sol USDC.
But like Orca and
There's
Radium are
also a
still
weird
competitive with.
Yeah, so there's this weird other side effect of this, right? So when you have a global state machine, you have kind of like risk-free arbitrage. And so as the prices move around, it creates basically like all of this token to token, pool to pool arbitrage, right? And that kind of like cranks the volume of these markets way up. And so like you could just imagine like somebody trades against the Orca pool, then it like gets arb back against the Radium pool. It goes like all over the place basically. And this creates a lot of volume that I don't know, like it would be a different question. All I'll say is like it would be a different question to ask where's the retail volume versus like where's the volume, just because of like a lot of weird market structure nuances. Now, another reason that AMMs are competitive is people don't really like understand a lot of things about LPing and AMMs.
Users? No,
I don't know.
not the users. You tell me. Not.
I don't know, like I haven't run the numbers. Like I'm sure some people who have an axe to grind have run the numbers more sophisticated than me. But like if you're LPing in like a 1 BIP Sol USDC pool on Solana, you're probably like just getting mostly arbed all the time.
Fair enough.
Yeah.
That's my short answer. But I think the also correct answer is what Gwart said, which is that Radium has become entirely dominant on Solana, and it's just because of shitcoining.
Yeah, it's like the users are also the ones making the coins. Like
yeah, and then they post. I mean, the thing
like,
with like Slurf is like the guy put like $50 million of liquidity in the Slurf pool. Like that thing's just gonna have like be trading forever, right?
Doug, you're not gonna piss us off by saying that AMMs are like obviously good for long tail assets. Like we're not gonna like disagree on that. What we're gonna disagree on is like when you actually have real assets trading. Like even like Phoenix doesn't support like lower than like the what set like it has like you're just not going to get liquidity for like a bunch of coins on pump.fun on
Why
a club in like 30
actually,
minutes.
Why though? Like it's a good question.
That's I've wondered this myself. Like Benedict, I've wondered this myself. We could market make for a shit.
I was a market maker in Japan, and I didn't even know, like, symbols in Japan are just like numbers. I had no idea what I was trading. Like, why would that be any different than trading, like, I don't know, whatever, like, Bitcoin is of the day is?
I suspect that we start to see this more. The first one that we saw was the per meme coin on Hyperliquid. Like, they actually just put a bunch of incentives around it, and then, like, professional market makers just jumped in and started trying to market make it, right? And it got like quite tight relative to what an AMM is. So I think like with the right like incentive structure and kind of like as the people who are trading on chain get more sophisticated, people will like take a swing at this.
Yeah,
Doug, like it doesn't seem totally impossible, I guess, right? But like you're also the dev is incentivized to put a lot of cheap liquidity into the pool, right? That's like that they don't I mean, we call them devs, but they're just like the guy who spun
I
up the
was thinking
token.
they're not. Yeah, I was thinking more like the real estate developers instead of like software developers. Like you're like developing like a property, but that's
Yeah,
maybe
yeah,
just
you're
like my
developing the
headcanon.
community.
Yeah.
Okay, well, okay. So, Doug, if like the way you phrase that question to Benedict, why
Yeah.
why is most of the volume on? Like, what is your hypothesis? Yeah.
Okay. Here's my answer. Professional market makers are smarter than passive liquidity, obviously. And they're more aggressive. Like they're smarter. They'll move prices faster. They have better alphas. Like all this stuff. What they aren't is their cost of capital is not cheaper. Their cost of capital is a lot more expensive. And like if you are a professional market maker, like, and you're going to hold risk, like you want to be really, really, really well compensated for that risk. Passive liquidity has a very low cost of capital, like especially to the extent like people are already holding these assets, right? Like if I'm, whatever, want to buy some shitcoin and there's a program for me to like stake and like provide liquidity, like, well, like I don't care if I have delta on this thing, like I'm already holding it. Like there's some like gamma convexity type stuff, but like even then, right? Like I'm just a degen on chain or like whatever, like it's not huge. So like my answer would be like cost of capital is lower, especially like cost of risk capital around actually holding the delta, and really liquid assets turn over a lot, and that makes it possible for HFTs to generate a lot of volume holding very, very small like positions. And like I don't know like actually like on-chain CLOBs, but like at least like tradfi, like the largest market makers and like the largest stocks like hold shockingly low like position limits. Like very, very little exposure. So like my answer would be that long tail assets, right, just require too much risk capital for what you're going to earn from like fees or spreads or like whatever. Which I think is like the reason like people don't want to hold, like Citadel doesn't want to hold like mother coin at the end of the day, or at least not in large size. But right, like it's an interesting point because like you do see kind of a similar effect in like regular markets where like these market makers get exhausted, their supply gets exhausted, and like stuff just wicks, right? Like there is no more liquidity on the bid because there is just not a ton of people willing to like hold those tokens like anymore. So like I'd say like that's an obvious drawback of like the current like TradFi market paradigm is like you do see like flash crashes like not infrequently because like liquidity is great until it's not, and then it disappears. So that's I guess would be.
Unless you see it in overnight sessions, right? Like just people don't market make because the ROI isn't
Yeah,
there.
yeah, they're just it's not there. Like so, yeah, it's not there. Or even like opening, like right after 9:30, just like the order flow is too toxic, so like nobody wants to participate. It's like this bad cycle. So that would be my argument. And like if I would say like my pitch of why AMMs can be like professional market makers over time is if like they weren't terrible at like getting arbed all the time, or at least getting compensated for that. And I think right, like the cost of capital advantage is like something that's durable. So
Benedict. Okay, so like, is your vision? I don't know. You don't have to give a time frame, but like you mentioned that per coin. I think I know what you're talking about. Like market maker swooped in. This is like clearly like a shit coin, right?
yeah.
Like it seems like you seem increasingly convinced, or maybe you have observed as of late that like maybe the market is trending more that direction with
I
moving like
don't really think it has
no.
yet, but what I think that will happen is basically when tokens are in the spotlight, there will be so much trading volume that a lot of the flow will go through sophisticated market making. So whether that is like a really, really fancy ambient pool, or whether that is like somebody market making on a CLOB or some like hybrid type decks in between, I think that basically like there will be some quite sophisticated entity that has like some alpha that's able to kind of market make these things when they're active. And then as they transition to like long tail assets, the cost of capital, I think Doug's argument around cost of capital is very good. And I think the cost of capital thing will kind of become the dominant effect, which is you don't want to just sit out there market making something that nobody ever trades all day. you have to spend all this effort to update your quotes, and like that has non-trivial cost and all of these things. And so like you could imagine basically the backstop liquidity for these things being like something of the form of an AMM. But I do think the global trend that I've observed is people have gotten more excited about actually pushing the performance of the execution layer. And with that, I would expect market makers to become more sophisticated and not less.
Yeah, okay. Let's go back to that though. Like we've debated this, like do CLOBs fix the issue around like this block builder? The block builder has like an intrinsic advantage, because my answer would be like a lot of people I think naively think, okay, like MEV is a problem for AMMs. If you have a CLOB that fixes it automatically, I know what my answer would be, but like when I
MEV. So I think that people, I mean, I'll just give my high level overview of MEV. I think it's obviously aggressively overloaded, and so there's this thing called trading, right? And that's like what me and Doug used to do. And like you can trade on different venues, and like one place you could trade is on a blockchain. And like when you're trading on a blockchain, understanding what auctions you're participating in is important. Understanding what latency races you're playing is important. Getting as close as possible to the people who are actually doing the ordering is important. Like people kind of call all of that MEV. Maybe it's MEV. I would just call it like you're trying to trade as well as you can. And then there is kind of unique emergent properties of blockchains, which are sandwiching, things of that sorts, like pure free atomic arbitrage. That's kind of like where the MEV ecosystem got its name, I think, but is maybe like not entirely the dominant activity anymore. So I think sandwiching is clearly caused by AMMs.
No, I actually no. I'll push back on that. I don't think necessarily, because sandwiching is just front running, and like if I see a transaction,
but you have to be able to take out the arb in the opposite.
we don't have to take out the arb necessarily. Like just front run your order and like trade it statistically.
Like okay, so
that's just front running.
Solana book is at 170,
yeah.
right? And then you submit a market
Yeah.
order, and then I sweep the book up to 175. I just took a horrible trade because the fair value is
Okay.
Then
So
I
your
front-run
market
you, so
order
then
comes
you
in.
take
I
a
sweep
trade.
you sweep up to 175. So no, I come in before you.
Yeah,
I
then
sweep the
your order
liquidity,
fills
and then I
175
put
to 176.
an ask right at like 174.9, and then drop.
And then nobody fills
No,
it.
but I
because it's a
have the
bad
market
price.
order come in.
Okay, so but you have to pay this huge cost to take out all the liquidity in front of 149, 174.9.
Yeah, but that's the same. Well, okay. So the difference here is that the liquidity is not reversible.
Yeah, exactly.
Okay. But if the market order is high, and like there are lots of like states where like you can do that, like there you do take out the liquidity.
You can
if the market order is large enough,
things.
if the market order is large enough relative to the resting liquidity, then you can do that.
That's probably true. Yeah, there are some ways that you can try to give them a worse execution by reordering. There, like it is theoretically possible.
But you can't give them worse execution. I mean, you can
back.
also, right? Like I see a market order come in, I can execute before that. There's stuff I can do. You're right. Fair price is 170, but there's still like information content in that market order, and like fair price isn't exactly 170. But I know there's a huge market order coming in, so like it does behoove me to like execute in front of you, even if I can't exit.
Yeah, I think, and one thing about trading on chain is the more that the price discovery actually happens in the markets that are on chain, the more kind of shenanigans you can kind of like expect to happen, right? So if all the price discovery for Mother is in one Radium pool, and then somebody sends a huge market order to buy Mother, if you observe that, you actually are massively updating your fair value, and so you want to perform a bunch of actions for them. However, if like somebody puts a huge market order for Sol in, it's like far less likely that that will actually move your fair, and so you kind of have, I think this is why you see most of the like worst execution happen.
But on the flip side, going back to Sol, you can, if you see price move at Binance, right, like it doesn't fix this like LVR sex dex arbitrage thing. You can wipe out the market makers at the touch on
that's kind of trading though. Like takers have basically always been advantaged in latency arbitrage.
Yes, but it depends on the block time, right? Like 400 milliseconds is a lot more than like 1 millisecond.
That's true.
But
That's super
All right,
true.
all right. You guys can
way
can
worse than
sit here
400
and
milliseconds. So Ethereum stuff.
all
All right,
right.
Gwart, what do you want to say?
I gotta cut off the nerd sniping for a second. I want to ask some spicy content. All right, I want like the from both you guys, and I want robust, like well thought out answers. Is any MEV like patently illegal in your opinion? And the reason I ask this is there MEV that like we can probably just give to Damien? Like we can just like push off to the SEC, because any builder that operates in the United States is like, we already know, like Beaver doesn't sandwich, right? Like, but I want to know, like, in your
they
opinion, are
do
there
stuff
anything?
that's like statistically sandwich.
Yeah. Go ahead. Actually, wait. Side
Oh.
note,
Yeah,
tell us about
Doug,
that.
say what you want to
Okay,
say.
so all right, so like let's say like a market, like you have 12-second window, and like in the average 12-second window, there's like on average like 5 buy orders, 5 sell orders, and they come in randomly, right? So if it's a FIFO market, right, like those don't move things around, like you're just flipping coins, right? Like buy, sell, buy, sell, buy, sell, the thing like fluctuates around. But if I can take all those orders and I have like a 12-second window and I can rearrange those orders however I want, like all of a sudden I can create like a much larger market impact because I can put all the buys like at the front, I can put all the sells at the end, and now I can get really advantageous execution because like the market's going to move up. Let's say I'm buying. I put all the sells at the front. The market moves a whole bunch because I've just rearranged all these things in a way that would like never occur in a FIFO market, and I've just got like ridiculously good execution to buy. So like that's not.
It's like a really fat.
Yeah, it's like like a fat sandwich, and it's not like sandwiching, but like those people, everyone's getting like much worse execution, like at the end of the day, and it's like the same concept, like even though it's not a traditional sandwich.
Yeah. Okay, so that was good. I wanted to hear you say that. So, anyways, we're going back to anything that you think is like patently illegal in MEV, or that like if any is anything going to come down from regulators, and then maybe also, and I know I do this where I ask two questions at once, but I want you can add on to that with increasing number of private order flow deals. Does that change the dynamics? Both your opinions. Whoever wants to go first.
Okay, I can go. Okay, so I'll preface this by saying this is not legal advice, whatever Matt Levine always says. I think me in my own capacity and a lot of other searchers think that sandwiching is, if not, like I won't weigh in on whether it's legal, but like is clearly bad and like
There's no price discovery.
Is
There's
bad
no price
behavior for
discovery. There's
users.
no
Yeah, it's not like the thing that you want to be as a trader at the end of the day is you want to be providing some sort of service to the market that you think that you can get paid for, and a service might be providing liquidity, and a service might be keeping the prices in line between venues. But a service sandwiching is it's very hard to argue that you're providing a valuable service to the market, which is why at the end of the day, if somebody comes to you and says like, "What the hell are you doing?" I think it's hard to justify. Anyway, do I think like I don't know what I think is the long run equilibrium of this? I think the problem is basically that you have most of the kind of like when something is possible to do, but then you ban it inside the US, you end up with a lot of people doing it offshore. And I guess there was a block report that a lot of the people who are doing the sandwiching on Solana, or a CoinDesk report that they're in Russia. That doesn't really surprise me. I think there are very few people in the US who like are at least admitting to doing sandwiching. But at the end of the day, like the question of how do you kind of make it robustly impossible as opposed to impossible inside the US is a bit tricky. Now, I mean, I guess we can get into like all the debates that are going on inside the Solana community about like, can stakers select to stake with validators reliably that are uninterested in sandwiching? I think that this is a compelling idea, although like obviously then you end up with these weird things that happen where 95% of the stakers are staking with some validators who commit to not sandwiching. They're getting lower yield, and then these 5% who are sandwiching are getting like ridiculous ROI on their validators. So Is that a stable equilibrium? Maybe not. And then the second part of your question is around order flow auctions. I mean, order flow auctions, they introduce basically like off-chain matching in some ways. There are multiple forms of order flow auctions, a million forms at this point, but a lot of them basically push the matching off-chain between two trusted entities. It's okay, Uniswap is going to take your flow, you're going to match it with a known market maker, and then you're going to kind of put whatever that match is on chain. That match is not going to generate really any MEV. You're basically trading one problem for another, which is it's not really DeFi as much anymore. However, you are kind of eliminating some of the negative externalities of DeFi because you're taking it all off chain. And so then I think the most interesting open question is, are there ways to kind of conduct these order flow auctions with credible auctions on chain, things of that nature?
Yeah, I think that's probably, I mean, like, my argument would be probably none of it's illegal, but like my bias is probably like I don't think like protocols should rely on like SDNY to like function. That's probably not a great like that's not very cypherpunk. Um, yeah, sandwiching might be illegal, but like it's tough. It's tough. Like it's tough. Like a lot of these laws are like written 100 years ago, and like depends how courts interpret things, and like courts lately are not interpreting things like very like I think like 30 years ago courts were like, oh yeah, like whatever the SEC says. Now it's like people are losing court on like stuff that should be like market manipulation. But yeah, order flow auctions are interesting because maybe there's a fiduciary duty there if I'm actually taking order flow from people, and like you have a duty of best execution. And like traditionally in the stock market, that looks like, okay, there's Reg NMS, and like you can't give someone a worse price than like what's at a lit exchange. And like it would be interesting, like how does that apply to order flow auctions? Like if there's a better price at a pool on Arbitrum, but this is like an auction on mainnet, like does that apply? Do you have to like do the best price as well? I think some of those might get in like sticky situations if regulators are aggressive.
Yeah. Okay, Doug, we've like, I feel like the only time that you and I ever like tweet back and or talk back and forth is when we're talking about this subject. But I want to hear, like, you're gonna have to spell it out now for everybody. Like, what is the long run of AMMs in your mind? Like, because I remember one time I asked you this, and you were like, I think that in the long run, permissionless capital formation will be very important. Those are like more or less your exact words. And it's like, okay, it's fine. It's fine. Like, you can say that, right? Like, I'm okay with you saying that, obviously. I don't take this stuff like offensively. But like, I want to know, like, what you think is the long run of AMMs. Like, you're looking at 10 years from now, and like maybe crypto's taken over, maybe it hasn't. But like, what are we using?
Yeah, I think actually the long run of AMMs is everything runs on AMMs. It's like extremist, militant, pro AMM view, but everything runs on AMMs or pretty much everything. And I think the mechanisms, I think like the core idea is like the mechanisms around them separate out like I have capital, I'm willing to take risk, and I have skill, and I'm like I can price things efficiently. And I think like the problem now is like to be a market maker, like liquidity, you need like the confluence of those two. You need capital and you need skill, and like not a lot of people have both. And so the people who do have both earn like enormous returns for what they bring to the table. So, I mean, it's like hand wavy, but yeah, I think like the core idea of AMMs is like liquidity and capital are just dumb. Anyone can deposit in. People mostly get the same return. And then you have some mechanism there where price discovery happens based on people who are skilled and good and consistently good at that. And they just move like the AMM price. And the people who are providing capital fairly get compensated for that, and depending like how skilled. So like I think like another problem with like both order books and AMMs is if you're an arbitrage trader, you basically get paid the same if the price discovery is like something really stupid, like what's the price of Binance, and that should be like very commoditized. But if you're first, like you get all of that first. So I bring some like really interesting alpha. that like only I really worked on. Like you should be compensated more for that, but like you really aren't. So I think like that's why a lot of like HFT stuff just feels like reinventing the wheel again and again and again, because you'd rather just like capture like commoditized stuff. So yeah, long run, I think AMMs are very good at pricing order flow. I think AMMs are more cooperative with like what I'll call alpha providers, where alpha providers are able to trade at like very flexible rates depending on their alphas. And I think like the interesting thing about blockchains is they're good at coordination. I think like you can look at stuff over time and say like how much alpha are you bringing to the table, and like the liquidity providers and the alpha traders can kind of fairly split that. And like right now it's very, very adversarial. Like if I'm bringing alpha to the table, there's a spread, and the liquidity provider is trying not to get like run over by me. So like a lot of trades, like there are tons of alphas out there in the market that just like don't cross execution threshold. And so like markets are much less efficient because of that, or those alphas end up going to very, very big firms that are already trading a lot, can combine those with other alphas. So like one reason Citadel is so successful is not because like any individual researcher there couldn't go do their own thing, but because like they're combining all these things in one place, and like individually none of that would be viable. So right, like it's very centralizing. So yeah, it's like hand wavy, like kumbaya, like bullshit, I guess. But that would be my thing. Is like I think it is an unlock in terms of like things can be much more cooperative between capital and alpha.
Why do you think these like decentralized hedge fund ideas haven't worked? Numeraire or things along those lines?
Oh, like Numeraire? Yeah, I
Yes.
think the problem with Numeraire is that I think if you're really good and you have really good alpha, you're probably not going to go to Numeraire to begin with. And I think like the way they remit stuff, like it's just like a lot of operational issues. Like how do you make sure you're actually getting paid? Like, and you have to work off their data sets as well, right? Like because at least my understanding is like you submit a model, but like the model has to be in their data sets. Like a lot of times like edges come from like weird stuff that might not be in the data set. And I also think if you have, let's say like Renaissance, like which is like one of the best like hedge funds like ever, and I think it's like very good at like I'll call it statistical arbitrage. If you have like 80% of like Renaissance's like signal, you basically have nothing. Like you have to be better than them. If you're just slightly worse than them, they're going to beat you on every trade regardless. So it's like this issue where it's like this hard start problem where like you have to be as good as the best people. Like if you were going to go start an HFT firm right now, like to trade like equities in the US, like you can't half-ass that. Like you're just not going to make, like, you're not going to do that.
Yeah. Okay, wait, we got to zoom back out now to just like protocol level stuff. How do you view the long run centralization of block building? And then also, does it matter? Like we have 3 builders now. Is this getting better or worse?
Oh, Gwart, what do you think about it? What do you think actually about that, Gwart? I know, I'm sure you have an opinion here.
Oh, I'm friends with all these guys.
I get invited to parties. So.
I mean, like anything that I just tweet about, it's probably more or less my thoughts. I don't think it's great. Like, and I don't think it's trending in the right direction. Or I don't think it's trending in the right direction. But I also, like, the thing is, I have less, like, strong feelings about this, probably, than I have strong feelings about, like, something that still bugs me, just, like, being very direct with you guys. Like, what bugs me is not that we have 3 builders that build all the blocks. It's that everybody sits here and pretends like nobody had any idea this was going to happen. And I'm exaggerating. I'm exaggerating by saying that, but there's still this disconnect. And I even see it, like another example is like with the Lido, right? Like with like Dankrad getting upset. And everyone's like, oh, no, like everybody said that was going to happen, dude.
Yeah.
Like, everybody, yeah. Like, and there's like, oh, we had no idea who, like, this was coming. It's like, yeah. We did. Like, come on. So that's maybe what, but I think this general theme is one I see in Ethereum a lot. And like, you can probably tell from like a lot of my trolling is like, this is something that I see is like relatively consistent. There's a lot of like, oh man, who could have known? And it's like all of us could have known. And it's just like, so maybe that's like more the angle that I come from. Like, it doesn't like really bother me. I mean, these are just like, you know, for how much I like troll even about like block builders and stuff, like a lot of these guys are just maximizing their utility. Like even the same way I see like VCs, right? Like I think these are like people who are just taking advantage of like an anomalous market, truly. Like they're like never in history has there been like, in my opinion, a period of capitalism where like you can make so much money with
So
like
little.
as little actual value created. Like it is absolutely anomaly. You cannot convince me otherwise. Like crypto is an anomaly in that capacity.
I
but
actually
I'm like,
would just like to
Kyle
go spend
Samani,
5
brilliant.
years in like traditional VC just to see if I would get as jaded as I've gotten about the crypto
Dude,
world. But
traditional VC is not like this. They like 3 or 4 of their companies they have to write off. Like they go to zero. You like almost always have some version of liquidity in crypto. So, anyways,
I have a take
ahead.
on the block builder thing, but I appreciate the cynicism. So like I think there are 2 core issues and / potential solutions. One is that there's not a particularly large amount of interesting things going on mainnet, which basically means that if you become very good at one thing, you can kind of dominate the market. And like the one thing is some specific types of arbitrage that everybody writes endlessly about. So I would wonder basically if there were 10 different sources of equally parity MEV, if maybe these kind of like aggregated, more neutral builders would have more success in the long run. Because they kind of win some here, win some there based on kind of the relationships that they have and their ability to aggregate interesting things. But with kind of a small number of trades, you get a small number of winners and a lot of power laws. And the second thing is there's an issue kind of because of the state root in Ethereum where you have to sell the block wholesale. And there isn't like a really compelling.
You not have to do that, and I mean, I know Solana
for,
doesn't do the Merkle route. You not have to sell the block wholesale. And
well, I mean, there may be kind of ways that you could. I guess I'll say I don't exactly know the answer to this. I know that a lot of the MEV boost design is kind of like
I guess you take
gated around the signature issues. So like the validator can probably on Solana just like tack a few transactions onto the end of the block.
But that's
no cost.
Damien. You do that. That's an SDNY issue after low carb.
Yeah, that's true. That's true. So there's kind of like this joint block building that happens on Solana where like Jito builds part of it and the validator builds part of it and they kind of like smush them together. But you can't really do this on Ethereum. And this means you have to sell the block wholesale, which means that kind of the proposer can't ask like, hey, I want this guy to do this part and this guy to do this part. You could imagine like, I don't know, they used to call this Pepsi, and then there's now a bunch of additional new names that people have come up with for ideas for how the validator could ask like or hold multiple different auctions for different parts of the block, so that they could kind of try to increase the competition at the auction layer. I don't know if that stuff will work. I also like if we're gonna push users off of Ethereum, like do we even care about this stuff? Like this is kind of, I think this gets back to the core philosophy, which is putting a lot of research effort into ideas around how to diversify the PBS ecosystem are kind of like of questionable value to me if you actually take seriously what people say about.
I mean, don't you eventually have? I mean, I guess if you have centralized sequencers forever, but like if you decentralize sequencers, don't you eventually have the same issue?
Well, you're kind of posting these like highly compressed large blobs.
Yeah, but I mean like on the L2 itself, right? Like you're gonna like theoretically have a network of validators on Arbitrum at one point.
Absolutely. Yeah, you just reintroduce new issues, but you can look at the things that Ethereum made mistakes on and try to avoid them if possible.
Yeah, I mean, like it sucks, I guess, that like it shouldn't be like centralization sucks, but like I guess like different types of centralization suck like differently. Like I don't think it threatens consensus, which is like the worst thing, right? Like you don't want to like being increasing returns so like someone can take over the network or is like incentivized to centralize consensus, which is like super bad. I think it's an argument like all three builders can be like captured easily, so you could censor. But like eventually there'd be enough like pressure of like non-compliant transactions, and like a non-compliant builder would be able to win. And like, okay, so like North Korea can get their transactions through in 10 minutes instead of 12 seconds isn't like the worst thing in the world. Yeah, I mean, yeah, it sucks. It's not the worst thing in the world.
Yeah, I mean, the issue with worse competition is basically that the builders retain more profit, right?
Yeah, that's true.
At the expense of
That's
validators. Like the validators are incentivized to have more competition because then, like, okay, the guys decide that they don't want to send all the money to the validators. Like, imagine if there's just one, he doesn't have to rebate.
Yeah, I mean, it's an interesting perspective now because like no serious like HFT TradFi firm is doing it. Right now there was like a very brief period where they were, but they weren't even taking like order flow, but like they were kind of doing very well when they were here because like Beaver or like rsync like don't really have very sophisticated like alphas. So like they're mostly looking at like finance price for like SexDexArg and stuff. I'm sure they like do some alphas, but like if Citadel comes in and like turns on their alphas, right, like they're gonna crush it. But like right now it's just not worth it for Citadel to do that.
Actually, well, that's a funny point. I've always curious about, like, been very curious about this. Like Citadel or like Sig or like one of these firms comes in and like
they would destroy it.
Up,
like they
like
destroy the competition.
They would. That's interesting. Yeah. Okay.
Like,
that's what I figured. Like, I've always been like, all right, guys, it's like Citadel or like, come on. Like, obviously, if they came in here and like tinkered for like a few minutes and figured out the EVM, like they would.
Yeah, I mean, there's like some
crypto natives. I'm like, dude, they have unlimited money.
Yeah, there's like some learning curve. Like the reason they don't is like regulatory stuff, and they won't like take certain. I mean, if they were involved, they wouldn't take certain sources of order flow. But yeah, if they went in there, like what can rsync or Beaver do to like beat them? Like, what's their edge?
Yeah, I mean the moat gets larger every day though because of like more and more order flow. So like deals being negotiated that they can't see. So,
yeah, that's I guess
think
more concerning
probably
to me.
Right.
Like
at the same time, like there is some. It was easier to get off the ground 3 months after the merge than it is now. If you want to be a builder.
Oh, I want to ask you, Benedict, really quick, and then I'll push this to you, Doug, as well. Like I've surmised that Solana order flow should be like the single most lucrative order flow to possess in the world. Do you like? Because I was just like looking. I mean, you look at like some of the daily occurrences on Solana. I'm like, oh my god, like this has got to be a gold mine, right? Like just like in aggregate, that's got to be like the most valuable order flow in the history of markets.
Yeah, I mean, I can say I have some thoughts on this topic, which is basically it's interesting because I don't know exactly how much this is true on Ethereum, but on Solana it feels very zero sum between like whether somebody intercepts your order and your user gets a way worse price or not. So basically like on Solana, it was really hard to land for a while. So these RPC providers were just like spamming your transactions to like every validator on the network. And then people were getting sandwiched all the time for obvious reasons because everybody saw their transactions. And also for a while, Judo was rebroadcasting your transactions that you sent until they stopped doing this. So there's been this aggressive effort both at the infrastructure layer, at the L1 layer, and then also at the app layer to like basically tighten up the number of entities that can get a look at your transaction before it lands on chain. And I think that everybody who is even an end user of this is kind of, they all have aligned incentives here, which is let's get our users' transactions into the blockchain as efficiently as possible with the fewest number of people like snooping on it beforehand. I think strictly because, I don't know, there's reports that sandwichers make millions of dollars a week on Solana, kind of just accessing this order flow. Because the slippage settings are insane and the tokens are crazy, liquidity is thin. So, I mean, I think that's probably evidence to support what you're saying, but I think also at the same time, there's this weird kind of difference where on Solana, it seems a little bit more like the Telegram bots care about getting you on chain well, and on Ethereum, it seems a little bit more like they're kind of selling your flow. But I don't know like enough about the nitty gritty of the market structure.
Yeah. Doug, do you want to just like give your thoughts on private order flow, centralizing aspects?
Yeah, I think it's probably overrated from like a MEV perspective, I don't know most MEV, but like I do think most MEV is driven by Binance rather than like on-chain order flow, right? Like stuff people over-index a lot, like to the point where not Tarun, but like Tarun like people will write like Tarun like papers, and like the starting premise is like, oh, there's an order, and then like we reason from here. Like MEV is generated, but like a lot of MEV is generated exogenously, just from like prices move at Binance, and now there's a liquidity pool, and the prices scale, and who's going to hit it. And even if no one transacts, like there's going to be a war between block builders for that. So yeah, I guess I don't think as much a ton about private order flow. I don't like it. Like I think like actually like blockchain. Like I wish actually there was a different name for blockchains. Like people thought of them more as networks rather than chain. Like the ledger is an interesting perspective, but like the network itself is interesting. And I think there's like something from an ecosystem perspective where you don't have like open peer-to-peer like protocols. Like those become like not the same as like Satoshi vision.
Yeah. Okay, Benedict, back to you for a like random non sequitur. Stakeweight QS. Have you like followed this at all? And what do you think?
Yeah.
I mean, I assume you followed it, but
yeah. I think a lot of, how should I say this? Basically, there are a few things that are actually codified in the protocol. And that's kind of like this notion of you aggregate some transactions and you propose a block, and then the block gets voted on. And then a lot of the rest of the stuff is determined by how the default client is implemented. And this is nowhere more present than the networking stack. So why does Ethereum have a mempool and Solana doesn't have a mempool? It's because the Ethereum default client network topology is you kind of just randomly gossip your transactions around, and then they propagate around the network. And on Solana, it's like you open up a connection to the leader and you spam it with transactions. And so basically nothing in any of the networking stacks is enforced in any meaningful way inside the protocol. And this is why stake-weighted QoS is a little weird, because it's putting this really strong precedent into the default client where you are honoring people who have a lot of SOL tokens, but you're not enforcing it, right? So anybody can build like a separate bandwidth network. And obviously Jita already runs this, right? They basically own some bandwidth to the leader, and they send them more valuable transactions. And a lot of other people have tried to build competitors to this service. So it seems to me both like a totally reasonable first cut as an idea for how to make the network a little bit more resilient if everybody's running the default client. And also kind of, I think there's this philosophical difference where Ethereum cares a lot more about things that are actually codified in the protocol, and Solana cares a lot more about implementation details of the default client. And so, like, I don't know if that makes sense. Basically, this idea is fine, but it will get superseded eventually. And that kind of makes it a weird thing to focus on in some ways.
Yeah. I mean, one interesting
know.
thing in blockchains, like that kind of revised my view on, is like how much you can actually change networks without like formal changes to the protocol, right? Like just a lot, like you said, like default settings matter a lot. Kind of worry that like some of that stuff.
Yeah, I think the Ethereum kind of like gossip has got entirely ripped out, and like Bloxroute runs a competitor. A bunch of these other people run basically just like Ethereum backbone gossip networks. Then Flashbots builds these. Flashbots protect services. They're basically all just like working around the fact that the default gossip that you turn on is really horrible because it's just telling everybody what your transaction is.
Yeah, I think like, okay, from my angle, I'm not going to make any of the Solana people happy by saying this, but like from the purist angle, like it doesn't seem great that like just this isn't necessarily just applicable to Solana, because you can apply very, very similar logic to like what you were saying, like using an RPC on Ethereum as well. But like just the premise that like over time it's become harder and harder to like get what you want at like a reasonable price onto the blockchain without needing like what I would consider to be sort of like an intermediary, right? Like, and so like, and this is something that Bitcoin's always pushed, for what it's worth. It's like the ability, like 10-minute blocks, ability to propagate your own transaction from your own node like whether or not this really enforces like the economic security of the chain, I think is something that Bitcoiners push really hard, and it doesn't like matter that much unless you're actually sending transactions over and like consistently. But like the reality is like it is not difficult to run a node for Bitcoin and propagate a transaction directly to the mempool, knowing like you pay a sufficient fee will be picked up by a miner. This is like less and less the case with more expressive chains for obvious reasons, right? Like you can't like in good faith send a transaction to the Ethereum mempool and not think you're going to get, demolished by
no, it depends.
somebody.
It depends
You know what
if
I
you're
mean?
like if your slippage isn't like crazy.
Peer-to-peer transactions.
Yeah,
Yeah.
if the market's liquid and like you're not huge, like it depends. It's not always.
I mean, there's just kind of two cool extremes in the market. One is like you have a really low bandwidth protocol and you want to send kind of not very sophisticated transactions, which are basically just transfers for now. And you want to gossip them around. You have to be incredibly resilient. And then we want to be more expressive. We want to be really high bandwidth. And I think the worst place you can be again is stuck somewhere in between. It's awkward to not pick one or the other.
Yeah, the mid-curve
coin.
Yeah. All right, Doug. I don't want to like go into like meme coins per se, but I do want to ask you like just if you want to finish up on this.
Per se.
Benedict has anything else, but like, how do you like as a builder, like you are a builder who has been in this space for like quite some time now, like how have you felt just like on a personal level about observing some of the absolute like disgusting degeneracy that we've seen in the past, I don't know, year? Like, does this take a toll on someone like you?
Like, could I just drop a Solana address and say send coins here and then see what?
Yeah, you should. I'm fine with that.
Ponder it in the morning.
If you made it this long in the podcast.
Yeah, here's the address. Send coins. Yeah, I mean, I don't know. It's interesting. We'll see, I guess, how much demand there is for it. But like, this stuff has like product market fit, and like, I'm like, there's a risk of like being too much of a purist, and like, why aren't you guys doing quadratic voting or retroactive public goods funding? Like, I don't know. Markets never work like the way you expect them to. So, like, it works. People like it. I don't think they're terrible. Like, I guess, right, there's a lot of rugs and scams and stuff. I doubt anyone's really putting their life savings into these coins. I think they're like going to the casino. I doubt. I don't know. Maybe some people are like getting wrecked real bad, but I think it's just like money circulating and people playing the game, and like, at least shit's happening, right? Like, it's better than like when we were racing hamsters a year ago.
Well, it's like the same thing.
Yeah, maybe. Yeah. Yeah, it's the same thing.
I mean, I think like I generally agree though. Like, I think that I used to be more like, I don't know, I want to say sympathetic, but like I used to be like, oh man, like retail's really, really like they have no idea how like bad they're getting screwed. And now I look at like most of what has evolved. I'm like, oh, these people know exactly what they're doing. Like, you know what I mean? There is no pretense here. True. Like, like everybody knows what they're doing.
One awkward part of it is that it's clearly zero sum, and the reason that people have made a bunch of money is because the market cap of all meme coins has gone up. But it's not like obvious. It's just obviously zero sum or negative sum.
Is it?
At some point, if the meme coin market cap just kind of levels off, you're a little bit screwed.
Yeah.
In terms of it's just musical.
Yeah,
I mean, it has to be, Doug.
No,
right?
no. I'm saying it's zero sum. People realize that. Like, I think one interesting thing with like GME, like GameStop, which is like larger than all this stuff when you think of it. Like, there's like it is PvP because it's like who's going to be left holding the GameStop bag, but like they have this PvE like narrative where like, oh, we're fighting the bankers, like who's going to overthrow the financial system or whatever. There's gonna be like the mother of all short squeezes. There's this mythology around it where it's like they're not PvP. Doesn't really feel like.
Well, the mythology in crypto is VCs have screwed us by doing high float, low FTV, low float, high FTV coins, and we're screwing the VCs. But it's like, no, you're not. The VCs are not buying this stuff.
Yeah, like it's like the populism movement for crypto for sure, like the pushing back. But I do actually, it's kind of interesting you bring up GME because like maybe it's one of my, like I think I would actually argue that people are probably getting, I don't know if I want to use this word, but like I would argue people are probably getting scammed more with GME than they are with most meme coins. Like in terms of their understanding of how.
I think because people are true believers.
You know what I mean?
Like people actually think like, I don't. No.
Yeah, and also like those people, they actually don't know that it's a zero-sum game. Whereas like everybody on Pump.fun knows, like at some point the dev is going to wreak
Yeah, but
havoc,
the one part
right?
of GME is you can point to Melvin or somebody like that and say we took a scalp. And
Yeah,
I
that's
think
a
with
good point.
whiff, you can't. It's not like Dragonfly was short whiff and like got blown out. And like no, you can understand kind of
Yeah,
where the value flowed.
yeah. No, that's a fair point. All right. Well, did we not touch on anything, guys? Anything more you want to add? You want to show anything?
Yeah,
Cockswap.
CockSwap. Yeah, go trade on CockSwap.
Wait, what chains are
I've
you
nothing
on?
to
You
show.
might as well
All right,
show.
yeah. Go to Ambient. We are on we're on mainnet, we're on Scroll, we're on Blast, and we will be on Base soon. And actually, we might have an interesting meme coin focused thing happening on Base. So I get excited.
All right, thanks, guys.
All right,
Appreciate
thanks.
it.
All right, thanks, Gwart.